KJ,
Mm-hmm.
how do you feel about salad?
I like it for lunch, not for dinner.
How do you think the country overall feels about salad?
I think the country overall feels about salad the way Pawnee in Parks and Rec felt about salad. Did you ever did you watch Parks and Rec?
I did not, but I already could tell I'm going to like it. Uh-huh.
Yeah,
How did that character feel about salad?
well, so Pawnee is the town, and the entire
Mm.
the entire town of Pawnee was very anti-salad. There was like one salad restaurant in town, and it was owned by this lady, and everyone was just like super mean to her. Like every time they saw her in the streets, they'd be like, "Ugh, gross!" Like, so that's how I'm guessing the country at large maybe feels about salad.
Okay, so I'm not going to give you any context for why I've asked you this question, but let's just remember this. It is an important conversation for today's episode.
Sounds good. Hello and welcome to Not Another Business Podcast, where we break down business news and cultural events according to rules we've entirely made up. I'm KJ Miller, ex-corporate consultant and current CEO and co-founder of Minted Cosmetics.
And I'm Daniela Dectar McCarthy, ex-corporate lawyer and current general counsel at Ness. And fun fact, KJ and I have been friends since our Harvard a cappella days because we are that cool, folks. Disclaimer before we start the show, the views we express today are our own and not those of our companies. Today on the show, we are talking about Cava, the Mediterranean fast casual restaurant that IPO'd last week. And spoiler alert, Wall Street loves them.
Yeah, and you know what? Kadar and I, we love them too. We discovered them when we moved here. We hadn't heard of them previously. But you know, it's pretty great, pretty good food. I will say I saw an article recently titled "Wall Street's Newest Darling is an Unprofitable Mediterranean Chain That Sells Bowls of Stuff." So I feel like that was very shady, and I'm kind of curious why all the shade. So I'm looking forward to discussing that.
Yeah, I think, there are a lot of questions, and this goes to the question I asked initially about Cava, and will it be the next Chipotle, which has done very well,
Hmm.
or will it be the next Sweetgreen, which IPO'd in 2021 and is just kind of barely treading water? And I think there are some fundamental questions about business and also some fundamental questions about how we feel about bowls versus salad. And so I am very excited to have this discussion.
Well, we will get into it right after our shameless plug.
Paige and I have neither the time nor the desire to chase down advertisers, so we like to use this segment to plug our own projects. KJ, what are you plugging?
I am plugging Minted Cosmetics. Minted is short for pigmented. We create everyday beauty for every hue. And I am so excited to talk all about our latest launch, concealer. You've heard me talk about it before. All of the shades are back in stock. It is our full-time brightening concealer. It does not clock out on you. We've gotten so many amazing reviews so far on the product. So I would head over to mintedcosmetics.com, check it out, and all of our other products. The code NABP gets you 20% off. And with that, let's get back to the show.
It's time for Flashback Friday. As a reminder, this is our segment where we take a look back at an old episode and give you a quick update. KJ, what are we flashing back to today?
Okay, so today we are flashing back to our story on Virgin Galactic, but only kind of. It's gonna feel like a bit of a stretch, but go with me here. Now, I'm sure you have seen the news about the submersible that is trapped 10,000 leagues under the sea. Have you heard about this news?
I have. I have to say, I haven't been paying super close attention. I've been inundated with alerts saying how much oxygen is left, at any given time, but I haven't really, no pun intended, gone on a deep dive into it. Honestly, just because it gives me too much anxiety, like I'm just too sad about it. So I probably know less than you do.
Mm-hmm. Well, let me just say the reason I think this is tied to Virgin Galactic is essentially both of these companies, Ocean Gate, which has this submersible, Um, Both of these companies send the ultra wealthy to the ends of the earth. And it's been interesting seeing what the reaction has been to this lost submarine. But let me just hit you with a few facts. So on June 18th, a submersible named Titan went missing. On board the vehicle were one pilot and four crew members traveling to see the Titanic, the wreckage of the Titanic,
Mm-hmm.
which is about 13,000 feet underwater in the North Atlantic Ocean. About an hour and 45 minutes into the journey, contact with the Titan was lost. Now, as I said, this submersible is, and the voyage is run by a company called Ocean Gate. And its founder and CEO, Stockton Rush, has raised close to $40 million dollars over the past couple of years to fund the ocean exploration company. Now, if you're wondering why the world has become so enthralled by this missing submersible, I think Vox summed it up nicely. They said, the quick answer to that question is that it's pretty hard to imagine people spending $250,000 to voluntarily go to an extremely dangerous place in a claustrophobic tube with no additional safety. Rich people doing something astonishingly baffling and risky is always a point of curiosity. And so, yes, you heard the ticket price there. It cost each of these people $250,000 to get aboard this thing. And this submersible, there's been a lot that has come out basically describing it as experimental. In fact, the company describes it as experimental. It was built using a material that's fairly unusual for a deep sea vessel. Typically submersibles, and now I'm just, reading straight facts because I don't actually know anything about submersibles.
Is this from submersible.com?
Yeah, no. This is from, I think, Washington Post.
Okay.
Typically, the part of deep sea submersibles housing the humans is a titanium sphere. Okay. Because you need something that can withstand immense pressures of the deep ocean. Well, these guys use carbon fiber, which apparently is cheaper than titanium or steel. And while it's extremely strong, it's pretty much untested for deep sea vessels. So, you've got a lot of people sort of pontificating on like why would they send this untested material so far down into the ocean, and then also pictures that have come out of the inside of this thing they're giving DIY vibes. Like the controller kind of looks like a PlayStation controller. It really looks kind of like taped and glued together. You can go online and see pictures yourself. But essentially, the reactions I've seen, you mentioned, you're sort of too sad to look into this. Sad is not what I'm seeing online. What I'm seeing, particularly on TikTok and other social media platforms, is a lot of people sort of saying, look, these rich people did a really stupid thing, decided to spend their money in a really stupid way, and they're kind of getting what they should expect to get. You do stupid stuff, you get stupid results. I have not seen a lot of sympathy. And so it just made me think of Virgin Galactic, because obviously flying to the edge of the earth is also quite dangerous. Only the super ultra can do it. If something bad were to happen to one of these guys, would you get people feeling sympathetic, or would you get people sort of feeling like, this is what you wanted to do with your money. You knew it was dangerous. So that's sort of the tie-in, but I don't know. What's your reaction to all this?
Yeah, I did see some, TikTokers commenting on how much resourcing is being put into trying to recover the submersible as compared to, and I don't know if this is a fair comparison, but how much resource was put into helping victims of like the ship that was off the coast of Greek and submerged, right? Who like migrants who are victims of trafficking. And obviously there are different bodies who are involved in the recovery of people and I guess evidence from those things. So I don't know if it's fair. I guess my overwhelming sense is that yes, there's an assumption of risk, but it just sounds like a horrible death, dying in a submersible. And that's why I feel some amount of empathy. I agree. There's an assumption of risk in both the Virgin Galactic scenario and in this scenario. You hopefully went in understanding that this is dangerous and you hopefully, if there is something that was very unusual about the construction of this particular submersible, understood those risks as well. I
Hmm.
don't know the extent to which all that was disclosed and absorbed by the passengers. I mean, presumably the pilot was the CEO, right? So he should have known. Um, but it just still seems like such a horrible way to go, whether it's being ejected from a spaceship in midair,
Hmm.
or like that space capsule was, or suffocating. But I agree, it's not the most sympathetic scenario, but
Hmm.
I do have some sympathy just because it's awful. It's
Yeah.
objectively awful.
Yeah. Objectively awful. Agreed. And two of the passengers on board are actually a father and son, and that
Horrible.
kind of breaks my heart. I think the son is 19 years old. Um, that does break my heart. But I will say, I understand why people are. I understand the reaction. I understand people saying this seemed like an incredibly stupid thing to do. Uh, and so if you're going to make dumb choices, you're the one who bears the responsibility for the consequences. I understand people's reactions to that. And I also think like I just it's just weird to me that this was allowed to happen. It's weird to me that someone was allowed to raise $40 million of venture capital and put together, this submersible with tape, glue, and whatever else, and sail these people to the bottom of the ocean, knowing how dangerous it is. Now we're using all of these resources, the Coast Guard and everybody else, to try and find them. I'm just sort of befuddled as to how something like this can happen. Like, a lot of people supported this. A lot of people and a lot of dollars went into this company. And by the way, they've done other explorations successfully. Um, but I think using other submersibles, it kind of baffles me that this was even allowed to happen. I do understand the take about not being all that sympathetic, but I am. It is a horrible way to die. I mean, you're literally suffocating to death, and that is terrifying. So yeah, I
Well,
get.
I'll also just say I think this kind of goes back to some of the conversation we had around Virgin Galactic, and who are we more comfortable going to space with, like private sector or like a government, public organization.
Mhm.
And your commentary now about like how is this allowed to happen. I don't know who the like regulatory bodies are for ocean exploration. I assume there's got to be an agency out there that does something.
Mhm.
But
Mhm.
if not, then that's I think the key to any of this, right?
Mhm.
Because like I did some reflection, of course, after talking with my mother, who had lots of opinions on our last episode, was thinking about, yeah, what kind of institution do I trust more? And I think ultimately, like, I, an ideal for me is a private public partnership, where private actors are acting responsibly for whatever their mandate is, and hopefully long-term profit requires keeping your customers alive,
Mhm.
and government is exercising responsible oversight that is commensurate with the risk of the activity that is being undertaken. And in the case of space exploration or ocean exploration, that risk is vast. And so the standards should be high, right? And so I don't know if this submersible truly was put together with shoddy shoddy mechanisms or whatever, but hopefully that it actually passed some kind of test. And if not, like, that is a failure,
Yeah.
Even there should be government oversight, even if individuals are wealthy and are taking on a vast amount of risk personally that is unnecessary. There should be government oversight that prevents this type of
Mhm.
tragedy. And I do think it is a tragedy. I don't know.
Yeah. Well, it takes me back to what I said last week, which is I'm good with waiting on President Joey B to tell me when I can get in a rocket ship safely and to tell me when I can get in a submarine safely. And until he signs off, it's going to be a no for me.
Well, what happens when the government switches?
Then it's probably going to be a no for me.
Right. Okay. Okay. Okay, fair enough.
All right, everyone, it's time for our main topic. Let's talk about Cava. Danny, hit us with the facts.
All right, well, I'm not going to reinvent the wheel here. The best succinct summary of Cava is that it is Chipotle for Mediterranean food. Okay? That's what it is if you haven't had it.
Mm-hmm.
Now to give some more detail, the company was founded in 2006 as like a local restaurant in Maryland by three children of Greek immigrants. I'm not going to say their last names, they're very Greek. And which means they're hard to pronounce, but their names are Ike, Dimitri, and Ted. They all grew up together. They've been friends since they were 6. They eventually opened a second restaurant and started selling their dips and spreads in local food stores, excuse me. And in 2010, they partnered with Brett Schulman, who had kind of been in the restaurant industry and in that area, to turn the two restaurants into its first and current fast casual format. Brett Schulman is the current CEO of Cava Group and is considered the fourth co-founder of the company. Today, Cava is in more than 22 states and operates 263 restaurants across the country.
Interesting. So, okay, well, I like that backstory. I did not realize it was started by, children of Greek immigrants. That makes me honestly feel a little bit better about it because I just sort of assumed because it is the Chipotle of Mediterranean food that it was just like some big corporate conglomerate that decided like, let's see if we can spit out another Chipotle-like restaurant. So that's a very interesting backstory. Glad to know it. But should we talk a little bit about numbers? I mean, I saw the article saying they're unprofitable. So, so what do the numbers look like here?
Right. It is unprofitable. But first, let's look at revenue. So, since they IPO'd, they filed an S1 filing earlier this year. And this is what we've learned from that filing. From the fiscal year ending 2016 to the fiscal year ending 2022, Cava has massively grown its revenue from $45.4 million to $564.1 million. So lots of growth. That's a compound annual growth rate of 52.2%. And looking at Q1 2023 results, compared to the same quarter in 2022, revenue increased by $45 million or a rate of 27.7%. So they are growing overall revenue, but they are still operating at a loss and have been since 2016. And what's kind of odd is their net loss actually increased from 2021 to 2022. So they went from a net loss of $37.4 million in 2021 to a net loss of $59 million in 2022. On the brighter side of things, their net loss for Q1 2023 was only $2.1 million as compared to a net loss of $20 million in Q1 2022. The company does point out that at the restaurant level, right, because Cava Group is the ultimate like parent company, at the restaurant level, it is profitable. So I don't know if they're paying everyone at corporate headquarters too much or what's happening there, but at the restaurant level, it's profitable. They do have other arms of the business. They have CPG because they sell their dips and such in stores like Whole Foods. They have, I think they regard like their app and some of the technology there as like a separate part of the business, even though obviously it's very intertwined with being able to like pick up your order at the restaurant and such. But so yeah, at the restaurant level, it is profitable.
Yeah, thinking about that, and this does make sense to me, right? So if we think about, I'll give an example for Minted. We have multiple channels, right? So and we are profitable in every channel, but there are some months where we'll be profitable in every channel, but corporate will not be profitable. So I tend to think, and different investors and different people are going to think about this differently. But I tend to think if you are profitable within each channel, or in their case, within each restaurant at the restaurant level, like that is what matters, right? Because the rest of it, you tend to think you can adjust, right? The rest of it is mostly, like you said, payroll, SG&A, or overall marketing. So the marketing that I spend, for instance, on digital, I tie to my digital channel. There's marketing I spend for wholesale, I tie to my wholesale channel, but then there's just brand marketing, right? And so that goes to the whole house, but that is something that's fairly easy to pull back on. So, their brand marketing, their payroll, their SG&A, stuff like that. You tend to think, again, different for everybody, but you tend to think that's the stuff that you can fairly easily flex, and therefore get to profitability more easily. It would be a much different story if at the restaurant level they weren't profitable either, because then it's like, well, then the machine isn't working, right? Like
Right.
you're not making enough in these restaurants to cover your costs. So that's interesting, and good to know, and maybe why their stock did perform so well. Because when people looked under the hood, they said, "Okay, you're not profitable yet, but we see that right now your corporate spending is funding growth, but at the restaurant level, you are making a profit," and that feels like a good story.
Yeah. Now, I will say on the cynical side or the skeptical side of all of this, um, they're IPOing now for a reason. And the main use of the proceeds, according to the company, is that they will use it to expand their footprint. As I said earlier, right now they have 263 restaurants in 22 states. And ultimately, they've put out a growth plan that will get them to 1,000 restaurants in across the country, right? Including in states that they're not currently operating in. The thing is how they got to the 263 restaurants they currently have was largely through an acquisition of a competitor called Zoe's Mediterranean Kitchen. And that acquisition occurred in 2018. They have converted the vast majority of those restaurants. I think it was about 145. They have about 34 left to convert the rest of this year, and then they'll be done with all conversions. And the reality is that the cost of converting an existing restaurant is much lower than the cost of constructing an entirely new restaurant. So there are some questions as to, okay, your restaurant is profitable right now, but your cost to expansion, which we know is what you want to do with this money, is going to go up once you've run out of these restaurants.
It is going to go up, but I would think, I don't know that much about the restaurant industry, but I would think most of that would sit in CapEx. So it wouldn't actually be on your P&L, right? Like buying the property, or I guess leasing the property and renovations to the property would be considered a long-term asset, I think, like the money you're spending there, as opposed to the lease, right? Like the lease, the monthly rent payment would go on your P&L, but I think the remodeling and all of that I think would sit on your balance sheet. So might not actually have that big of an effect on their, at least on the profit piece, but certainly would have a big effect on the cash flow. So like you said, makes sense that they're choosing now to IPO, because they're going to need a lot of cash to get that done.
Right. So let's talk about the IPO. Ultimately, the offering was for $318 million. Market cap was just north of $2.5 billion. Prior to trading, the pricing of the stock was $22 a share. Trading surged by about 99% on Thursday, slight dip on Friday, but only by 12%. And as of the close of trading yesterday, which was Wednesday of this week, the stock was trading at $38.34. So a pretty good IPO. People are excited about it. People are asking, is this the opening we needed for an otherwise a really dry IPO market? Is this going to encourage people who've kind of been waiting in the wings to jump in?
Yeah. Those are the takes that I've been seeing the most of. Just the the IPO is back, because we have seen, and we've talked about on this show, IPOs recently that didn't do so well. Peloton being one of them in the last few years. A couple tech companies that slid in and no one cared that much about. So it has felt like we haven't had like a nice, juicy, sexy IPO in a while. And there are some people who think like Cava is just benefiting from that. The fact that investors want this momentum, that like they want this moment. And so they're creating it, maybe not necessarily because the underlying asset is worth all of it, but because they want something to get excited by, my curiosity though is, how does this, you called it the Chipotle of Mediterranean food. How does it compare to Chipotle?
Yeah, so good question. Chipotle IPO'd back in January 2006. At the time, it had just under 500 locations, and funnily enough, it was priced at the exact same price, $22 a share. It also had a great debut and doubled in share price by the end of its first trading day. Today, Chipotle has over 3,000 locations. So we went from just under 500 locations to 3,000 locations. And it trades at over $2,000 a share. It apparently kind of consistently trades north of 50 times earnings. So Cava is much smaller right now, and is appreciably smaller than Chipotle was when it IPO'd, although they were priced similarly. It's probably also worth mentioning that Chipotle overall had been profitable for the 2 years leading up to its IPO. So folks are eager to see the next Chipotle with Cava, and certain metrics like the Q1 2023 loss numbers going down substantially for Cava are promising, but it's not quite in an analogous situation.
Well, and the other thing is, when I think about Chipotle versus Cava, I do feel like Americans are far more used to the idea of Mexican food, casual Mexican food, fast food Mexican food, upscale Mexican food. Like, I feel like we've had a good long time to get used to that. I don't know if that's the case for Mediterranean food. Like we love it in our house, but I don't know if the average like Ohioan, North Dakotan is into Mediterranean food.
So interesting that you mentioned this, because this is a key point of Cava's CEO, which is basically that millennials can only handle Mexican, Italian, and Asian food. Okay, like millennials and older, those are the only cuisines we can dabble in. But Gen Zers, who close to 50% of Gen Zers identify as some kind of minority group, they're all about ethnic food, like authentic ethnic cuisine, and that trend is only going to continue, right? So Gen Alpha, I think, is supposed to be over 50% of Gen Alpha is supposed to identify with some kind of minority group. So while millennials can't handle anything fancy or anything other than a burger, Gen Zers are ready. They're ready for tzatziki. They're ready for hummus. Like, they're ready for the exotic.
That is so interesting. I had not thought about this as like a breakdown from an age perspective. But I do believe it. I do believe it. I mean, when my parents were here, it's so funny. When my parents were here, when Kayla was first born, my parents were here helping take care of her for her first like couple months. And obviously we ordered takeout all the time. No one was cooking anything. And we ordered Cava a lot. And my parents, not only had they never heard of Cava, but they also, I remember the first time we had it, they were like, what is this? Like, what kind of, what kind of food is this? They were, very much like, they had never experienced it. And so we told them it's Mediterranean and whatever. But I hadn't thought about it as a like generational divide. That is very interesting. Another quick story I'll tell is that the first time I ever even heard the word hummus, much less like saw it with my own two eyes in the wild, was my freshman year at Harvard. I was in the like orientation program, and they had like sandwiches out, like a buffet sandwich, and someone next to me got the vegetarian sandwich, which had hummus, and it was like a hummus and I don't know, carrot, whatever. And I was like, what is hummus? What are you eating? And it's so funny now because I very distinctly remember the moment where I was introduced to hummus. And yeah, I think you're probably right. I think Gen Z and below probably is much more adept with other cultural foods than generations before.
Yeah, these are foods that I've grown up eating, so it's funny to hear your experience, but like it makes total sense. I also have seen a lot of TikToks of people who have about like crafting the best kava bowl. And I do think a key source of those videos is people who've struggled because they didn't understand, they weren't familiar with the different flavors. So like, okay, look, I've done a lot of trial and error because I didn't know what any of these things were, and at first I was doing way too much. Okay, this is what you have to do. You know, just take the regular chicken, and like, you don't need all these fixins, but definitely get the pickled onions because those are good. You know, I mean, but people like really didn't know what the sauces were. They didn't know what all the toppings were. They didn't know how to combine them, and they're learning and then falling in love. But it like takes trial and error because these are not flavors that everyone has grown up with at home. But Gen Z is ready. They're ready for that trial
interesting.
and error. Yeah. And interestingly, one of the other kind of positive aspects of Cava's performance to date and what makes them attractive is when you control for geography, like their revenue is up, like their profit is up. Like they are, what the CEO will say is they are as successful in Fayetteville, Alabama as they are in, you know, a suburb of New York City or in a city. And, you know, we didn't talk about Sweetgreen yet, but that was one of the big struggles of Sweetgreen. So Sweetgreen IPO'd in 2021, and it's been a bummer. You know, they IPO'd with 140 stores in 13 states, predominantly in urban centers. It was marketed at $23 to $25 a share, but ultimately priced at $28 a share. When it began trading, it went up to $52 a share, but now trades around $10 a share and hasn't traded in the low 20s, which is what it was marketed for, since September 2022. And one of the big issues that Sweetgreen has had is that it hasn't been as embraced outside of urban centers. But that's not Cava's issue at all. Cava seems to do well in all geographies. And so, you know, maybe this is early speculation, but bowl versus salad. I think Americans everywhere don't love salad. And the bowl might be the critical difference in product and a driver of Chipotle-like success for Cava.
It is really interesting. I think you're right. I think in the salad versus bowl tournament, bowls are going to win, you know? And it just makes sense to me. Now I like Sweetgreen, by the way. We eat a lot of Sweetgreen in this house, but I will say, and I don't know if most people feel this way, but to me, a salad as a meal feels very quintessentially lunch. Like if you approach me at dinner time with nothing but a salad, I will be mad at you. Okay. Because that is not a dinner time food. And to the extent other people feel the same, you know, that gives Cava twice as many opportunities to feed America versus Sweetgreen. People are like, you know, it's dinner time. No, I'm not going to get a salad. That's just how I feel.
That's a really great way to think about it. I didn't even consider that. Right. You have 2 bites at the apple in a day. You've got lunch and dinner. Whereas if you're Sweetgreen, only the true health nuts are gonna want you twice.
Yeah.
Interesting. Well, okay. So then let me tell you the second thing that Cava thinks is like a key consumer trend. It's riding the wave of, and how we can reconcile that then with our beliefs about bowls versus salad. So Cava has said that one of the most important trends lately, and you know, Ness always refers to this trend as well, and it's regardless of age, is that consumers are looking to lead healthier lives. They cite an independent survey of unknown size that says 70% of respondents want to lead healthier lives, and 50% said that healthy eating is a top priority, right? So they're noting this trend, which is important. And then they point out that the Mediterranean health diet is the healthy diet of choice right now. That for 6 years in a row, U.S. News and World Report have cited it as the #1 best overall diet. And so Cava's like, people want to be healthy. The best way is to have the Mediterranean diet. I don't really know if their bowls are truly what people mean by Mediterranean diet, but they're going to at least embrace the use of the adjective Mediterranean or the descriptor and go with it. If people really want to be healthy, salad's probably the healthiest thing. And so, but I guess salad's not the #1 diet rated by U.S. News and World Report. It's the Mediterranean diet.
And salad just feels, I mean, I think Sweetgreen also has to overcome the stigma associated with salad as just being a healthy food, right? Like, I think for most people, when they think salad, they don't think delicious. They think healthy, good for me, I should eat it. But no one wants to like be shoulding themselves all over the place, right? Like I want to eat what I want to eat, you know? So I think like Sweetgreen has that extra barrier where, to your point, Mediterranean food, people just say Mediterranean style eating is healthy. Okay. They don't even really point out what exactly about it is healthy. They just say it's healthy. So you get to feel like you're doing something good, even if your bowl has, 1,000 calories, which you can very easily make 1,000 calorie bowl at Cava.
Right.
But you still get to feel like you're doing something good. So yeah, I think salads have a stigma. I really think they do.
Yeah, and that's really interesting that you bring up the should because, and this is a very different context, but I frequently talk with my leadership coach about should as a motivator and how should is the vast majority of the time isn't going to get you there. Like you need a why that makes you want to do the thing.
Yeah.
And I think ultimately you're right. People do feel like they should eat salad, and it kind of takes time eating a lot of salad to kind of trick yourself that you love it.
Yeah.
Whereas bowls and the Cava bowls, if you know what you're doing with the ingredients, which as we discussed might take some trial and error, are delicious. And delicious is a better why. Yeah.
Delicious is definitely a better why. So, I mean, is there anything else? I feel like we've definitely been mixing speculation with facts, but before we firmly move into speculation, any other facts we should know about Cava?
Well, not necessarily about Cava, but I do want to talk about other venture-backed food companies and where they're at today, some of which were kind of notorious, and then ask, are we having some kind of food moment, or is there something to learn about history? Okay? Because at the same time that this Cava IPO is happening, I have also been reading news articles about Crumbs. Do you remember Crumbs?
Oh, yes, I remember Crumbs. It was one of when I moved to New York City in 2010, it was one of the first like New York places that I went to. I know I think operated other places, but I had never been to a Crumbs or seen a Crumbs until I got to New York. And I just was like, oh my God, humongous cupcakes, like this is the promised land. I loved Crumbs. I loved it.
Yeah. So Crumbs, many people loved it, went public in 2011 through a reverse merger, and it was valued at the time around $66 million. Price per share was about $13. They had 34 locations in 6 states at the time of IPO. And officials from Crumbs had said the plan post going public was to grow to 200 stores in 3 years by 2014. Well, 1 month after going public, it announced a drop in sales at their existing stores. Stock fell to $4 per share. And the company just kind of hummed along pretty painfully for a couple years until it eventually delisted from NASDAQ in 2014. Instead of expanding, it was like, okay, just kidding. We're gonna pull this back. And in 2016 officially shuttered all stores. And now at the end of 2022, going into this year, the original couple who created Crumbs brought back the abandoned IP for a mere $350. And they are now trying to revive the brand, but this time taking more of a CPG approach. So like talking about putting Crumbs cupcakes in stores as opposed to opening up brick and mortar stores. So that's happening with Crumbs. Okay.
That's interesting. That's interesting to me. I just will say, I think crumbs was happening because for those who have never been, they make these like oversized cupcakes. They're very delicious. And there was definitely a cupcake moment. I think we all recall, I don't know, whatever the years were, I don't know, it was like maybe '08 to like 2012, somewhere in there. We were all jazzed about cupcakes. And I do feel like, generally speaking, we all sort of like came down from that high. So that's interesting.
Well, okay, so cupcakes, fine, but and this is on a smaller scale, but at the same time, we also have news about Ample Hills Creamery, which I know Kadar loves and I loved. This was an ice cream brand, a set of stores that originally started in New York. Over their 10 years of existence, they had taken on $20 million in venture capital. They never went public, but they used that venture capital to expand to 15 shops. They had people who loved them, including Bob Iger from Disney. They had a shop in Disney. Oprah loved them. Okay, but in the end, they tried to expand too quickly, and they ended up going bankruptcy, filing for bankruptcy in March of 2020. They were acquired in 2021 by an Oregon machine parts company called Schmidt Industries for $1 million, and now the original owners have bought the company back for $150,000 and are starting over with their original store in Brooklyn and 3 others in New York this summer. So they are also trying, maybe not a different approach, but what they've essentially said, and there was a big New York Times article covering them, is they're not going to chase the shiny thing and think about, all the possible stores they could open across the country. They're going to go slow and steady and make sure that their skis don't get out in front of them, basically.
Yeah. Sorry, you were going to say something.
No, I just think it's interesting. Obviously we're talking about dessert. Like now, is it dessert versus dinner? Right? Like, I just think it's interesting to think about these companies that have taken on venture capital in the food business, and all of them, basically, the plan when they take on this venture capital is expand footprint. Like, that's what it is. That's the name of the game. Get into more states, get into more cities, get into more people's line of sight. And sometimes it works and sometimes it does not.
Yeah, I mean, I think the dessert distinction is a good one. We spoke about with Cava versus Sweet Green, Cava having 2 chances at bat, and that's every single day. Whereas dessert, most people do not eat dessert every single day. Certainly do not eat oversized cupcakes every single day. So you don't have that many opportunities to get your customer in the door. But I think it's a good point, this one about like expansion, because I mean, I sort of don't know. You've only got but so many ways to expand your revenue. If you're a restaurant, you've either got to get more people in the door, or when they're there, you've got to get them spending more money. And I think when you're a fast casual chain like Cava, the chances of you really increasing your average order value are slim unless you raise your prices. Like most people, they're not going to go from ordering 1 bowl to 2 bowls, right? Like they're going to get their 1 bowl, they're going to spend their $10 to $14, and that's just what it's going to be. So then it's like, well, can you get more people in the door? Sure, maybe, but at a certain point, you've probably saturated your neighborhood, your market. The people who want to come eat are going to eat, and that leaves footprint. And so I think that's why you see, when these restaurants are looking to grow revenue, you see them expand their footprint and oftentimes expand too quickly. And I wonder if the reason they're expanding so fast so often is because they are trying to, beat out the competition before someone else makes their version of a Cava, which I'm sure other people are thinking about or maybe even trying right now.
Yeah, that makes a lot of sense. It also makes me think of the emphasis that Cava and Sweet Green, really, when it IPO'd, placed on certain convenience elements for ordering, and like the just the ease of using the app to place online orders, to place orders for multiple people. Actually, Sweet Green has really pushed Outpost. Have you heard of Outpost?
No.
They're not like full-on brick and mortar stores, but they're places where you can go pick up mass orders of Sweet Green. Like if you're ordering for your whole department. So I guess, obviously they have some physical element there because they are making the salads, but it's not like an eat-in store. You don't see all the food on display, so there's probably fewer costs associated with like, you know, probably fewer personnel kind of working there. And it's specifically for like mass ordering. So it's the idea of like making it easier to not just pick up one salad, but pick up like 20 salads. So that's a way to like increase or average order value, I guess. Something like that.
See, and even when you just said mass salad ordering, I pictured myself at some sort of conference or something, and then it's lunchtime, and I walk out and I just see nothing but salad. I got to tell you, I would not be that happy. It's just hard to get excited about, and I like sweet green, but just a big table of salads, that does not excite me. But if you told me Chipotle for lunch or Cava for lunch, and I walk out and I see a roll of, big table of bowls with, all the fixings like that, that's just more exciting. It just is.
So what do you think? We kind of glossed over speculation, but we did it in with facts. I think let's just get to work. What do you think?
I mean, my final verdict is I think this is going to be a very successful company. I think this is going to be a success story. I love that Gen Z is eating more different types of food. I hope that continues. There's so many cuisines that, like, generally speaking, most Americans have never tried, aren't familiar with. So I hope this ushers in a new wave of that. And yeah, I think we're looking at a pretty big success story. What do you think?
I agree. I am maybe too biased because I just love the food, but I think that's worth something. It's product. They found, I think, product market fit. It's a delicious bowl, and if in fact, because I would be concerned, do people in middle America love this? But if based on the stores they've opened so far, people are loving it, like, I don't see what is really stopping them from having the same results in the states that they haven't gotten into yet. So I'm excited, and I think this will be an instance in which expansion probably will achieve exactly what they want it to achieve, unlike with Sweetgreen.
Yeah. Well, there you have it.
All right, it's time for Judge and Jury. And if you're new here, this is the segment where we dive into recent news and ask whether there was a display of good or bad judgment on the part of the person we're talking about. This week, we are giving all of the Bravo fans out there a fun J&J just for them, because this is a deep cut in terms of people who've appeared on Bravo shows. We are specifically talking about the daughter of former Real Housewives of New York cast member Ramona Singer. Her name is Avery, and she has taken to the airwaves to promote her new business, Batch Boss, but also express some frustration with her time on Roni and how it has impacted her ability to, pursue certain professional paths, including working in finance. She specifically went on the podcast Beyond the Velvet Rope with David Yontef. This is a podcast that features largely Bravo shows and news. And she basically explained that when she was working at Morgan Stanley, she had to take a back seat on the show and ultimately had difficulty getting jobs in finance because of her time on the show. This was in a larger context of basically saying that she has never before really taken advantage of the Bravo network and is now going to do it for her new company, Batch Boss. And she should be able to do that because the show has otherwise, hampered her before. What do you think?
Well, I mean, yeah, I saw some reactions to this of people being like, boo-hoo, you were on TV and then your time at Morgan Stanley was hampered. Like, first of all, you still made it to Morgan Stanley, right. Which is not an easy feat. But I don't know. I think this is probably good judgment because she is now taking this platform, whether it, hindered her in the past or not. She's now saying, like, look, it's what I've got. So I'm going to use it to the best of my ability to promote this business that I've built. Like, I'm going to use the resources I have and, try and bring some visibility to this company I'm building. So in that sense, I think it's good judgment. I think she, maybe rubbed a few people the wrong way by saying, like, oh, Bravo has hindered me, whatever. I think there's a little woe is me there. But ultimately, I haven't thought about Avery Singer in a decade, and now,
Right.
I'm talking about her and thinking about her. I looked up her Batch Boss, website. Looks nice. So I think good judgment. What do you think?
Yeah, I listened to not the whole podcast that she was on, but a portion of it. Because I wanted to actually my instinct was okay, it was bad judgment to have this like woe is me line. So I was trying to search for good judgment. Ultimately, I feel like she really kind of went in and out of good ideas and bad ideas, like saying the right thing and saying the wrong thing. She just really went in and out. None of it was catastrophic, So I think it is good judgment for her to use this platform now. And I do believe you're right. I haven't heard about her in years. And so I believe what she's saying when she's like, I've never tried to use this platform before, but I believe in this business. And like, if I have it available to me, why not? And I think I agree with that. I would just maybe avoid talking about how much it is like impacted you negatively in the past when you weren't taking advantage of it, just because it's not the most sympathetic position,
Yeah.
At least not in that way. You can talk about how like I'm sure you got hate mail and stuff that was like hard to deal with personally, and everyone thinks your mom is crazy. That's probably also hard, so like there are ways in which I could be like, yep, Avery, that sounds like it was challenging and like you've persisted and you're not messed up because of all the time you spent on reality TV. How difficult it was for you to get a different job than Morgan Stanley in finance. Maybe let's avoid that.
Right. Yeah, agreed. All right, folks, that is it for this week. As always, we hope you're loving the show. And if you are, please be sure to subscribe and leave us a 5-star review.
And be sure to follow us on social. I'm Danny_D_MC on TikTok, and KJ is I am_KJ Miller. Thanks, everyone.